My number one place where I invest my money is into my own businesses. Now, I don't really consider this a traditional investment because when I invest my money into my own businesses, like into Briefs Media, which is my newsletter company, that is an active investment because I run that company. I am the CEO of that company. I work every single day to operate and manage Briefs Media. So when I invest money into Briefs Media, I'm working to actively grow that money. And that is another form of investment. It's a way for me to now put my money to work, not into real estate, not into stocks. In fact, over the last couple of years, I've been actively investing less money into real estate, less money actively into stocks. That way I have more money to invest into my own company because I want to grow my own company. Because when you invest your money into stocks or real estate, you're trying to get, again, a 7 to 10% return on your money, which is a great return over the long term, especially as a passive investor. But when you're investing your money into your own business, there's no limit to the types of returns that you can get. So financially, you can get higher returns. It comes with more risk, but then you're also able to grow whatever it is that you're working on. And for me, Briefs Media has a lot more upside right now, which is why I've been investing a lot more aggressively in that. Again, it works for me because I am an entrepreneur. I am that type of person. And so I'm willing to accept that risk that if the company goes bankrupt, I will lose all the money that I invested into it and all my time that I put into it. But I'm willing to take on the risk. If you're not an entrepreneur, you don't have a business idea that you want to invest in, that's okay. You can also invest in other people's business ideas. You can invest in startups. And this was something that I started doing around the pandemic time because I started seeing that investing in startups has become much more accessible thanks to something called crowdfunding. There's new regulations that allow regular people like you, me, anyone with as little as $100 to invest in crowdfunded or startups with small amounts of money. And with this, you also have to understand that when you invest in somebody else's startup, you will probably lose money. The statistic is like 8 to 9 out of 10 startups will fail or go bankrupt within the first 5 years, meaning most of the startups that you invest your money into will lose money, period. You have to understand that when you go in. But the goal isn't to lose money always. The goal is that when you make money that one time, it should hopefully make up for all the losses. The fourth place where you can consider investing your money is into cryptocurrency. Now, cryptocurrency, again, very speculative, very volatile. And the thing that I want to kind of point out here is in my total investment portfolio, 80% of my investments are in things like stocks and real estate. If I take out my own business, I have 80% of my money going into stocks and real estate. 20% is in more of what I call the speculative investments. These are things like startups, these are things like cryptocurrencies, and these are things like precious metals like physical gold. 20% of my investment portfolio are these speculative investments. 80% stocks and real estate. You're going to figure out the right percentage for you, but understand now cryptocurrency falls under that speculative side because it can go to zero and it can also go up very quickly. Now, the reason why I like cryptocurrency is because I have seen the benefit with things like cryptocurrency. I've had contractors that work with me and for me overseas. And paying contractors overseas, sending money that far is difficult and expensive. I used to have to go to the bank. I used to work with a different bank, an older bank, where I had to go to the bank to send wires. Sending a wire takes time and it's expensive. It was like $45 or something, $40 to $45 to send a wire overseas. And I was traveling. I was in California at the time where my bank didn't have little regional operations over there. So now I had a contractor that needed to be paid and I couldn't send him money. I couldn't send him money through PayPal because his country didn't accept PayPal. I couldn't send him money through Payoneer or I think they changed their name, but whatever that platform was where you can send money to countries overseas. And so it was a big mess trying to send money to him when I didn't have access to my bank. And then I asked him if I could send him some cryptocurrency. He said, sure. And so I sent him cryptocurrency payments. He got it in a fraction of a second or maybe like 5 seconds. And it cost me a couple cents. And that was a big light bulb moment for me where it's like, wow, this has really changed the game of how I can transfer money and how money is done. And so because of that, I own cryptocurrency. Now, I don't own a bunch of the smaller coins. I invest in the big things like Bitcoin and Ethereum and a couple other smaller ones, but mainly Bitcoin. And for me, this is a speculative investment. For me, it's an investment in the future. I believe in the blockchain, but I also understand the risks. I know it can go to zero. If it goes to zero, is it going to affect me? Not really. But if it goes up a lot, hey, that'd be cool. It'd be nice. It'd be fun. So as part of this speculative investment, something that I believe in the blockchain, but I also understand the risks, and that's how I invest my money, where 80% of my investments are stocks and real estate, 20% are some of the speculative things like startups, cryptocurrency, and gold. Which brings me to the fifth place where you can consider investing your money, which is a precious metal like physical gold. For me, I own some physical gold. And when I say physical gold, I don't mean an ETF or paper stocks of gold. I mean actual physical gold. It makes up 2% of my investment portfolio. And for me, I just buy some physical gold every month, and that's it. The reason why I buy gold is not because I'm expecting gold to shoot up in value. I really don't even monitor the price of gold. For me, it's an alternative way to save money, because the way that I look at it, again, this is just me. Don't listen to what I do. Make your own decisions and follow your own advice. But for me, what I do and the way that I look at it is, if I were to go to my backyard and bury $50,000 worth of cash and also $50,000 worth of gold today, and then I covered it up, and then 10 years from now, I go and dig up these two things, these two piles, I think that the gold will have more buying power than the $50,000 worth of cash in the future. Because of that, I look at gold as an alternative way to save money, and I look at gold as a hedge against the worst case scenario types of situations. And by worst case scenario, I mean of something happening to the dollar, something happening to our economy. That is where gold could potentially have more value. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.